Yeah, well, BHP is Australia's biggest company and the world's biggest mining company. The last financial year, well, it was stellar for BHP. But look, Ed, the interim result this time around, it's probably disappointed in terms of those dividends and the profit as well.
Yep, Ross. Look, profit, revenue and dividend all down for BHP. Iron ore prices were 25% lower in the half, while copper prices were down 19%. BHP still fetched about $85 a tonne for its iron ore, which cost them just $15.50 to produce. BHP also announced it would sell 2 Queensland coal mines as it shifts to commodities like copper and potash. BHP is expecting increased demand for its resources from China and India, which will help it offset a slowdown in demand from the US, Japan and Europe.
All right, so there is the BHP results. Let's get the market reaction. Ingrid?
OK, well, looking at BHP shares today, of course, we did see them close down about 0.3%, but it did stage somewhat of a comeback in today's session. It was down about 2% at the start of the session after its weak across-the-board results, but has managed to claw back, as I said, most of those losses today. OK,
so I spoke with BHP's Chief Executive, Mike Henry, just a little earlier and asked him if higher inflation could cause a washout in the mining industry, especially if other miners find their profit margins being squeezed.
Look, it could play through in different ways, Ross, and it's probably going to be a little bit of both. So one will be, yes, in a world of high inflation, some suppliers will get priced or costed out of the market because their costs will rise by too much. But the other thing that it can do is give rise to higher commodity prices. And if you're a low-cost producer like BHP is with a lot of operating discipline, large assets at the low end of the cost curve, that can actually help to improve margins over time, as those at the high end of the cost curve require more to stay in the market. So, it's that sort of thinking that has underpinned the strategy that we've had to ensure that we've got large assets in deliberately chosen commodities at the low end of the cost curve, and then to operate those assets really, really well. Because the single biggest value growth lever for BHP does lie in productivity. Given our scale, small increments of productivity create a lot of value for shareholders, and so that's focus number one.